Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome. My name is Brandon Wendell, Chartered Market Technician, and I'm going to go ahead and take a look at some of the cryptocurrencies that are out there today and just do a little analysis on the fly with you guys here, looking at the weekly chart of Bitcoin right now versus the US dollar. And we've had a little bit of a retracement. It looks like we may be done with that retracement. We'll find out for sure. Basically, we start off here to our high. That's our last impulse. And you can see we retraced roughly 61.8% Fibonacci retracement right around that 53,000. And we never went into bearish territory, never went halfway. So still very, very strong in Bitcoin, even though we had a little setback there on the smaller time frame. So we go down to that daily time frame. And by the way, before I do, if we go out to the weekly here, if you want to figure out where we're likely to head to, we can use Fibonacci extensions. So if we look at the previous impulse up and correction down, really it should be on this one right there. You can see we impulse, corrected, impulsed, and we stalled out. Pretty much the high was at 127% of the previous impulse, which is Fibonacci extension. So if we look at the current impulse, low to high, to our retracement point that says that the next impulse up should terminate, or at least stall, at either 71,476 or 82,712. And we could go a little bit higher than that too as well. There's another number up there, obviously the 127, and then so on. So one of those points is likely to be our next pullback and stalling point if we're done with the pullback as of right now. So that being said, dropping down to the daily time frame, let's take a look at what's going on there. And I need to widen this. There we go. So as you can see, we are starting to see bullish pressure again. Now, there is a little bit of a problem with this bullish pressure that we're getting. We may end up retracing a little more. We might not be done. And the reason why I say that is when we continue to push down, when we bounced here right near the 61.8%, unfortunately, we had gone below 40 on the RSI. And when you go below 40 on the RSI, usually means that the subsequent move upwards will not take out prior highs before retracing. So ultimately, we're going to stall out really before we get to about 59,400. We're not likely to get there without pulling back at some point. So what will happen is if we pull back, as long as we don't go below 40 on the pullback, then we will be able to break to a new high. We should expect the overall bullish trend to resume itself. But as of right now, today we are bullish, and we're just likely to stall out before we get there. We can take a look to see where that stall out point might be. Now, if we can't get above 60 when we rally eventually, or if we go back below 40 on a pullback, then I would suggest that we come back. This is not really a great demand zone. It doesn't qualify quite as a zone, but you do have a little bit of a basing area here. And a rally base and rally right around that 42,243. It's also a 78.6% retracement, the next retracement zone. So dropping down in the 4-hour time frame to fine tune a little bit of this analysis here, well, we can see we're moving up very nicely. And we also actually happen to have perhaps a little bit of supply here. Actually, zoom in more on this to just kind of check it out. Yeah, you can see we had kind of a rally base drop right there. That's going to prevent us from going straight up. And instead, I mean, maybe a reaction to some previous areas there, but there's a lot of selling pressure that originated right around that 58,580. So I expect that we're going to see some stalling out before we get there. We are seeing a divergence here, which is a positive sign. It's already confirmed. So that's suggesting bullish pressure. And that actually happened as soon as we broke the high of the last candle. That confirmed our positive divergence and told us we were going to rally this afternoon on Sunday. And it's likely to continue. But again, like I said, we're not going to be able to break that previous high here without some sort of a pullback. That's pretty sharp of a move, and it'll usually get a retracement anyway. So expect a bit of a pullback, and we can take a look to see where it might pull back to. And as far as where we're going to turn around again, I'm not quite sure. You know, we could also put in perhaps a Fibonacci right here on that move to the downside. And we are possibly close to 56,898. So basically 56,900 is where it is. It's that overlap of those candles adds a Fibonacci retracement value. So that may be the top of this candle here, or at the top of the move before we start pulling back. So look for a stalling right around 56,900 and a little bit of a pullback at that point. Let's go down to 60-minute time frame, see if we can fine tune this anymore. There is actually a zone a little higher than that. If you notice right here, we have drop base. Oh, that doesn't quite work for a zone. Never mind. I was thinking there was a basing and it dropped coming out of the 78.6 retracement, but it's not. So yeah, I think this is probably the best. Whoops, I mean do that. Clean that up and remove this. And our best target right now for our next pullback down, you can see we're already starting to get a little bit of a pullback as I speak, just as expected, because I didn't think we were going to be able to get above this 56,900 area. I think it was what 56,899 or something like that, 898. So we're already starting to see weakness as we come up to that area, but it's just going to pull back perhaps right here to this breakout point. Notice you have a large candle right where you're breaking out of some prior highs. That's probably another good target for a bounce where we can continue to move upwards. And the key thing will be when we bounce from that area, we should be above 40 on the RSI. That'll confirm that we've got enough momentum to carry us upwards. So we want to look at that both on the 60-minute and the 4-hour time frame. On the 4-hour time frame, about 54,986 is that area I'm expecting a bit of a bounce. So go back out to the weekly time frame and move on to Ethereum here. And looking at Ethereum on the weekly time frame, you can see that we had a bit of a pullback already. We pulled back roughly 50% of the previous impulse up. And it's not really such a surprise that we pulled back a little bit because you can see we had divergence where prices were moving upwards very sharply, but the indicator was moving kind of sideways, showing there was a lack of momentum as we tried to rally. So not likely to be able to continue to move to the upside if you don't have the momentum. So let's drop down into the daily time frame here and see if we can fine tune a little bit of this analysis. And you can see that we started to break a little bit to the upside today. The positive thing is it looks like we're done with the retracement here on Ethereum because not once in the last two lows, you see we tried to make a lower low, but we didn't go below 40 on the RSI. As a matter of fact, we kind of diverged a little bit where prices were moving down, but the indicator was simply moving sideways. So we ended up trying to make a fresh low on less momentum. That's a very bullish sign and it should cause prices to continue to rally here. And if I bring this back a little bit, we can try to take a look at our last impulse up, which really you have to include almost the entire move here. But if we do that with the Fibonacci extension from these lows all the way up to the highs and retrace back, it should give us some projections as to where prices are likely to turn around again after they rally. So we should be able to break out some new highs here, 52.47.52, 60.43.99 to be our two targets immediately for our next pullback. And one of the key things is going to be, and when we come up to this previous high right here at 45.55, we need to actually break above 60 on the RSI at the same time we do that. So that way we have enough momentum to carry us to some new highs. So far we've got a lot of weakness as we tried to rally. We did make a new high, but we didn't get above 60. And you can see we eventually broke to a fresh low. So if we try to do the same thing again, we really need that momentum to be there and pull the RSI above 60 so we can sustain those highs and continue to go higher. Otherwise, if we try to break out and we're not above 60, expect another collapse down to the 61.8% retracement. Take this down to the 4-hour time frame, see if we can fine tune anything and look for where prices might go on the smaller intermediate time frame. And I'll clean up my chart first of all to get a better view of what's going on. Let's see what's the close here. We got 45.0643. The high is 04. So that is a rally-based drop supply zone. So it's very important as well when we come up to this area that we have a lot of momentum because this actually qualifies as a supply zone, rally-based drop, and we need more than 60 on the RSI to have enough momentum to actually break through that zone and get to the upper levels. And out of curiosity, let's see, we close here, 2024, 2320. So that goes higher. So that's also a zone. So we have rally-based drop and rally-based drop. So again, as we come up to the zone, watch for maybe a little bit of a stalling, but if the RSI is above 60, it'll just be a short-lived pullback before we go higher. Then we go up to the 46.85 as our next target. As of right now, we don't really have a good demand zone to be able to buy, but this may turn into one if we continue to see bullish pressure pushing up into that supply. Going down in the 60-minute time frame, just to get an idea of what's going on there. We don't really have much going on. We do have a little bit lower of a supply zone to keep in mind. I'll move this down a little bit there. Actually, there it is. I can fine tune the zones a little bit more here, and we do have a 44.18.80, 44.48.95 as our immediate target there. We got drop base, drop supply. And as far as our demand zone, we actually fine tune that as well. So if we do get a bit of a pullback, this would be a buying opportunity, 40.57.38, 39.69.37, with our target just below the 44.18 for a little pullback before it eventually again goes higher. So that's what I've got on Ethereum. And we can move on now to, what else do we have here? Binance, let's see. We can take a look at Cardano. I was looking at that a little bit. And as a matter of fact, I believe I have a couple slides I put together already. Let's find it. Nope, unfortunately got rid of those. So I'll just do it manually. It's not a big deal. Anyway, looking at Cardano, I'll start off again with the bigger picture, weekly chart perhaps, and start off fresh. There we go. So looking at this Cardano, you can see we've had a pretty steep pullback after divergence. So again, no real surprise here. The prices are pulling back. When you've got that much movement to the upside with no momentum, it's no way you're able to sustain it. So we pulled back quite deeply, and we're almost into our demand zone on the weekly chart. Haven't quite hit it yet. That would be this. Drop base and strong rally from 131.61, 102.20. Let's take a look at the Fibonacci's as well, see what they give us as far as retracement points. So, see template, there we go. And we've pretty much surpassed all the retracement points, so it may come back all the way to the demand zone, almost 100% retracement. There's really not much to stop us there unless we go down to the daily chart and see something else. Good news is for Cardano holders, we haven't gone below 40 yet on the RSI. We're 43. We're close to it, but we haven't broken it yet. So if we start to turn around now, then there is a possibility of rallying up. But this is looking a lot weaker than the other cryptos. Going to the daily time frame to kind of fine tune some of this. Going back, it looks as though we might be at a zone right now. So let me get rid of this retracement. So it wasn't really helping us anyway. You can see that we have rally base rally right now. There it is. And I can probably go wick to wick. Sorry, my dogs are barking. All right, my apologies. My dogs are barking at a neighborhood dog. Wasn't expecting that, so they were dead asleep. Anyway, it happens. So continuing on here, again, looking at clean up my lines here a little bit too. We've got an area of demand at 149, and I think we're hitting that right now. So let's take a look. Yep, there we are. We're bouncing off that area. However, we are way below 40 on the RSI. So if we do rally out of this, we're not likely to make new highs, which means this area, this little high right here, that's going to be the highest we get, which is a pretty good move. I mean, that'd be a 50 cent move, which is what, about a third of price. It's over 30% rally there. If we get that, which it looks like we could, but we should stall out before we hit the top. Let's put it that way. So the easiest thing to do really would be to figure out where we're going to turn around. And if you're looking for that point, it's going to be based on a Fibonacci retracement of that downward move. And let's see, we've already pulled back more than 23.6. The next pullback area is 161. Let's make this a little bigger so we can see it all. You can see we impulse down from this area, and now retracing back up. We actually do have drop base drop right here in the middle at 50%. So that's probably the best quality area for where we're about to stall out on this move back up. It's probably the target as we go up right now. So I would expect prices to continue up until we hit right around 166.71 and then push back down again just because we didn't have enough momentum as we came up from these lows, from this area of demand. We could continue to break down through that demand zone because we had such weakness and go down to the 131.61. So right now it's a little late to join in on the upside, but there may be a selling opportunity 166.71 down to the 131.61 area. And if we go down a little bit more to the 4-hour time frame to fine tune that analysis, we can. And the zones, I don't think there's really much else we can do with it. No, maybe a little bit here. You can see we've got rally, base, drop, and that actually becomes a bit of a problem because it looks as though this may be an area that was tested once already. So here we're on the 4-hour again, and rally base drop. So we could pop up just below that area to 167.56.89. Dropping down to the 60-minute time frame. Let's take a look at what's going on there. And we actually do have a couple more zones along the way that we can keep an eye out for if you're trying to pick some tops and bottoms here on smaller time frames. The 60-minute, you got little drop base drop action right there at 163.34, 165.10. And then if it does go, let's see, we're pretty bullish there. You can see we had a positive divergence. Let me draw that out in a moment. Do this one first. You had a positive divergence that suggested the move that was going to happen to the upside. So it's kind of nice to be able to go down to the smaller time frames and kind of get the fine tuning of price action. See the details there, and you got the positive divergence, and we popped up. So we're definitely bullish. And as we come into these areas, these are just little pause areas. Honestly, it looks like we should be able to go a little higher, and perhaps all the way up to really the top of this move would be right about 171. So I honestly wouldn't pay too much attention to this one at all. And maybe we get a little pause, pull back, another buying opportunity before it rallies up to the 171 area. So that's what I'm seeing there. And let's see, we can take a look at Solana as well. Start off in the bigger picture here with Solana and work our way down. Once again, starting on the weekly time frame. Here we are. And just doing some analysis here before. Let me go ahead and clean that up. There we are. Start fresh. So once again, we had the divergence where we had prices moving up on the weekly chart, but the indicator was moving down. And that is telling us that there's weakness coming in, and sure enough, prices pulled back. So on the pullback, let's see how far back we went. So we did a 50% retracement. A little more, 61.8%. So it was a little bit more right there. Anyway, so that may be the end of the retracement. We're still pretty strong. So we go to the daily chart, not 1 hour, daily chart first. And on that daily chart, we are currently, I'm not sure if we're putting in a low yet. You can see we're at that 61.8% retracement. It's not really any kind of demand that's fresh here, so we could fall down a little further. And at the 78.6, there's another zone. So if we do fall down any further, this is where we're going to be going. And we're kind of at the cusp of which way we're going to move right now, because we obviously have lots of bearish pressure here. But as you can see, we are not below 40 on the RSI. Let's see if I can fix this a little bit. That line for now. Thank you. There we go. Anyway, you can see that we just put in a low, and our lows are not going below 40. So that's bullish. So it's suggesting we may actually turn around and go up from here. Looks like we've already tested this area. Close to it. I suppose if you use the wicks, we did test it right there, but we could potentially stall out a little bit there as we move up. But since we're above 40, I would expect that this may be the end of the downward move that we just experienced. And again, if I go back to the weekly chart, if we are going to continue to rally back up, the impulse itself began from right here, rallied up, and we retraced 61.8%. So now I go back to the daily time frame, and that gives me some price targets here. I can move this over, but it doesn't really matter. It will still be the same numbers. You can see that our first target is 270. So if we continue to push up, we might only hit this as a little speed bump before we continue higher up to the 270, maybe even up to 325 right now. So the other possibility is, of course, if this fails and we end up breaking below the low of this candle, instead of making another, we need to make another candle. And we need to make a higher low and higher high, and that would tell us we're moving up to the 270 area with a little pause here at 238. However, if we can't do that, if we end up breaking below the lows, then we're likely to move down to 163.17 before we bounce again. So it's kind of an either or. You just kind of wait and see what happens. If we go down to the 4-hour time frame, just kind of fine tune again. Looking at that price action, we had a divergence. That's suggesting bullish pressure, but not great. You can see it's already stalling out. What happened here was, delete this. We had a move down in price, but the indicator was moving up. So we tried to move down on lower momentum, and that leads to a rally. But this rally stalled out because we were doing that from below 40. So it shows a little bit of underlying weakness, and we pulled right back. So overall, this is not really ready to run to the upside yet, and I'd be a little cautious where we may stall out if we rally once again right here at about 210. I don't really see a good entry point for a long, so I think it's best to just kind of be patient. If you were going to play this on the long side, you wait for the daily time frame where, again, we break out above this high. So if we can get it, not the candle we're on right now today, but tomorrow's candle, this is Sunday the 28th, so the 29th, if you end up having an open with a higher low and then you break out of this 202, then potentially you're going to go up to the 238 area, I believe. But Yeah, go back down to the 240. We're just kind of sideways right here on the 4 hour, so I don't really want to mess with that yet. If we just kind of drift a little bit, we may end up pushing down from 210. See if there's anything on 60-minute. No, nothing really good there to try to enter in on anyway. So yeah, just gotta be a little patient with these and let them play themselves out until you get a clear direction. There's nobody forcing you to take trades, and that's the thing. You got to make sure you take the right positions for yourself and have high quality and high confidence in the positions you're taking before you get into them. So until next time, trade safe, trade well, everyone. Take care.